Hi, I'm Scott Schmitz, President of North Star Investment Group, and thank you for giving us an opportunity to explain how working with North Star Investment Group can help your retirement and your IRA stabilize for the coming years. But first, I want to give you a disclaimer and let you know that investing in real estate and notes and mortgages is risky, and that while North Star Investment Group is a competent investment group, working with us, we cannot guarantee that you'll make a return or get your money. But we can let you know that because we are competent, you do have a better than average opportunity to make a lot of money and secure your retirement. So I just want to make that disclaimer and also let you know I'm not a lawyer or an accountant. I'm not giving you legal or accounting advice, so please seek your legal and your accountant to go get any information that you need and investigate our company in the potential that we work with you. But I'm going to show you in the next 30 minutes an opportunity that you have with your IRA, how you can partner and invest with North Star Investment Group, and then we're going to take that money and we're going to go rolling into performing and non-performing mortgages on property right here in America. So we buy first position mortgages and then we go work them out. We create a cash flow or we create a lump sum, and then we repay you at a flat interest rate or on a 50-50 joint venture. So sit back, relax, take about 30 minutes. You watch the upcoming video, and if you have any questions, comments, or concerns, please contact me. My number is 754-223-9970. You can always get me there, or you can email me, scott@northstarinvestmentgroup.com. Thanks. I look forward to hearing from you. Have a great day.
All right, let's go over 10 deals and how working with North Star Investment Group and defaulted notes can produce a return for you. First, I need to go over a disclaimer that North Star Investment Group, we're not going to guarantee, or we can't guarantee your earning, and that we cannot guarantee your success or income level, nor are we responsible for any of your actions. We are only responsible for our actions. And investing in defaulted notes is risky, and at North Star Investment Group, we can't guarantee that you'll make money. These slides are example only. But on the other side, I wouldn't be making this video if it wasn't profitable enough for North Star Investment Group to turn a profit, pay you back, and keep on going. So let's get into 10 deals and let you know, look, it's a numbers game. We got to cycle through the numbers. It's a law of averages, and the fact that when we buy 10 deals, some are going to modify, some are going to get a deed in lieu, and some are going to foreclose. So I need you to keep in the back of your mind as we go through this, all of these assets are worth $50,000. Now you're saying 50 grand, that's not a lot. Well, here's the truth behind this. Assets that we're able to buy on the secondary market, unless we go buy a $2 to $10 million pool, are from hedge funds. We're getting the smaller value assets that the hedge funds don't want to deal with. So they're $50,000 assets. They're still good properties, and people are living in them. That's the value, minimum value. But in this example, $50,000 is the asset. We're going to purchase them for 50% of that value. $25,000 is going to be our purchase price. That includes legal fees, that includes taxes, that includes any brokerage commission to North Star Investment Group as well. On average, it's going to take 9 months to foreclose. Depending on what state you're in, Texas, you can foreclose in 31 days. Florida, depending on the county you're in, could be a year. New York and New Jersey, we don't touch those states, but they're anywhere from 2 to 5 years to foreclose on still. We're going to also assume that when we get these borrowers to modify, Their payment they're going to modify to is a $500 a month payment. We're not going to include any hardest hit funds in this, and the model, the average is going to break down this way. Out of 10 deals that we buy, 3 are going to modify, 3 are going to become deed and lose, and 3 are going to become foreclosures. So let's get into the 3 modifications right now. Again, buy 3 deals, 25 grand each, $75,000 investment. We control $150,000 worth of real estate assets. Let's say it takes 3 months to get those modified. Through borrower outreach, contacting them back and forth. Finally, 3 months later, we're getting them to start paying again. So the other 9 months for that year, we're able to collect $500 each times 3. That's $4,500 in cash flow coming back in. That's per deal. Multiply it by 3, that's $19,500 of cash flow that's coming back in. So when we annualize that out, that's a 26% return on our investment. Not too bad, not too bad. Now, there's also another program called the FHA 10-23 program. And here's what it says. It says that if the borrower has made 3 timely payments and their credit is a minimum of 550, they can refinance with FHA under this program, and FHA will cash whoever is the underlying, they'll lend up to 97.5%. So we bought these 3 deals for $75,000 total. Let's get these people to refi. Their refi amount would be $146,250. So if we add our cash flow of $19,500 plus the difference there, our $75,000 investment, that equals, and when we subtract that out of this, that equals $90,750 in profits. Because we got them to refi after 1 year, we collected their cash flow for a year, and we collected $146,250. Subtract 75, that's where our $90,000 profit comes in. It's 121% annualized return. Not too bad. Now the 3 deeds and liens. Same thing. 25 grand invested, $75,000. We're controlling 150 grand worth of assets. Again, it's going to take us about 3 months to get a deed in lieu, paperwork, all that stuff. Now what we're able to do is we actually own the property. We own the deed to the property. Let's list that to sell. We're going to sell it as is today. Let's say it takes us another 3 months to do that. So total, we're into the deal for 6 months. We're going to sell it as fast as we can, 90% to current market value, because we don't want to hold on to this. We're going to net about $40,500 after closing, paying our realty fees and closing costs, things like that. So we subtract out that $25,000 investment. As you can see, there's going to be a profit of $15,500. Multiply that by 3, that's a profit of $46,500. $46,500 divided by our investment, it's a 62% ROI. Now if you do this twice a year, you can see it's 124%. Now you could conceivably do this twice a year as long as you have enough deed and liens coming back in. So if you're just going to go buy 1 deal and expect that person to automatically deed and loan, kind of joking yourself, kidding yourself, but when you have deals coming in, these are the averages that we are seeing at North Star Investment Group. So let's go through the 4 foreclosures now. Okay, we got 4 at 25 grand, 100 grand invested, controlling 200,000 worth of assets. 9 months to foreclose again, 3 months to sell. 12 months later, we're going to sell it, same thing, 90% of value. We're going to net $40,500. It's $15,500 in profit. Times the 4 deals we did, so that's $62,000 in profit. Okay, that's a 62% annualized return, because this took us about a year to do. So let's do a recap. 10 deals. We invested $250,000. We controlled $500,000 in value. Remember, because we are buying these at 50% of current market value. So we are controlling $500,000 worth of assets that are backed by real estate. 3 are going to modify. So on the front end, let's say we just get them to modify and reinstate. Nothing else happens. That's a 26% annualized return. On the back end, let's say we're able to get them to cash out with FHA. It's 121% annualized return. The 3 deeds in lieu. On the front end, 62%. If we do that twice a year, it's 124%. And with a foreclosure, all we're going to get is 62% as a return on investment because it takes us a year to foreclose. So the low end, here's where the profits are. 3 modifications yield us $19,500 in profits because that was just the cash flow. Remember this now. The 3 deeds in lieu gave us $46,500 in profits after we got them back and sold them. The foreclosures gave us $62,000 in profits after we got them back and sold them. So the 10 deals, the 10 deals netted us $128,000 in profits on a $250,000 investment. That's not too bad for a annualized return of 51.2%. Now, how can you work with North Star Investment Group? There's one of 2 ways that you can work with us. First, a 50-50 joint venture split. Okay? So, you as the joint venture partner would put up the money to go buy these investments, these deals. North Star Investment Group goes finds them, funds them, works them out, does everything, because that's what we do. And you and us are going to split the profit 50-50. So that'd be 64 grand to North Star Investment Group and 64,000 to you, the funding partner. It's 25% return on your investment. That's what you get to keep. So, can we say shake and bake and do it again? Because think about this. What is your investment backed by? First of all, it's backed by a competent company, North Star Investment Group, and most importantly, it's backed by physical real estate because we are buying all first position liens, mortgages, on single-family residential properties in the United States of America. If you would look at your portfolio of mutual funds or your 401k, and if you really dug into it, you really got into it, and you knew where they put your money, you'd see that I would bet a very large percentage of your portfolio is already invested in real estate somewhere, whether it's a REIT or some sort of mutual fund that is actually holding notes and mortgages. You're indirectly investing in it, and you're getting a return of 6 to 7%. And who's making all the money? The mutual fund and your investment advisor. So, nice thing you have to remember here is we still have 3 performing mortgages because in this low end split, we did not get those 3 mortgages to refinance. So those 3 mortgages are paying us $500 a month, and we're going to be able to split that return 50-50. You get $250 a month, North Star get $250 a month. So that's the joint venture aspect of it. Now, let's say that you need a cash flow. You want to get, you don't want to wait 6 months or 12 months or 24 months to get your money back. Because on all joint venture deals, I'm going to disclose what I just showed you is an example, and it happens, but I don't want to bet the farm on the timeline of the money coming back in that fast. Between 12 to 24 months is when you're going to get your money back, somewhere in that time frame with the joint venture. Because if they, let's say it takes us 12 months to foreclose and another 4 months to sell it, well, we, we're in to 16 months now, and that's over 1 year. So I want you to keep that in mind. Now, if you say, Scott, I need a more stable return on my investment, great, we have just the deal for you. You can earn anywhere between 6 to 12% interest, and the way this is going to work is you're going to give North Star Investment Group a loan, an interest-only loan from your IRA. Now, in this example, I'm going to use 10%. And the way it works is North Star Investment Group is going to disperse your payment quarterly back to you. So this loan is a 2-year interest-only loan with the option of extending it another 2. North Star Investment Group is going to file a collateral assignment or a notice of interest in each county against the notes that were recorded to secure your loan. So North Star Investment Group is going to go buy the loans. You have lent us the money to do so. We then take the assignment of mortgage from the other party. We take another document. We record that assignment of mortgage in the county. We take another document and we record a notice of interest that says you, John Smith, have an interest in that assignment. You don't own it, but you have an interest. So now the beautiful part is, let's say that borrower pays off. The title is clouded. You have to get your money back. So it gives you peace of mind knowing that we're not going to go and collateralize your loan against somebody else, because it's going to be a secure investment. So you lend us 250 grand at 10%. We're going to pay you $25,000 a year back in interest. So that'd be $6,250 dispersed quarterly. How is North Star Investment Group going to pay you back? At the end of 2 years, we are going to liquidate 3 of our performing loans that we still have at the year 2. Because remember, we still have 3 performing loans. That's going to generate probably about $140,000 in profit, or revenue, I should say. And remember, we've been recycling your money behind the scenes in deals. Whichever deals are also used to purchase with your investment money, with your loan, we can go liquidate a few of those. It's not a problem. There's a nice secondary market for this, because after a loan has been fixed and has been paying for 12 months on time, we can go sell that to a insurance company or a institutional buyer, and they'll pay between 80 to 90% of what the current loan balance is. So what are the loan interest rates for you as an investor? It's going to show you the return here in a moment. So if you want to loan us, if you would like to loan us between $5,000 and $49,999, we can pay you a 6% return. Between $50,000 and $249,000, we can pay you an 8% return. Between $250,000 and $750,000, we can pay you a 10% return. And $750,000 and above, I made a typo there, I see that now. But $750,000 and above, we can pay you 12%. Why? You're probably asking yourself, why can you pay us more if we lend more? Here's the reason why. When I am looking at these deals and our company goes and puts an offer in, the more loans we can buy, the better discount. Same concept as at Walmart, Sam's Club. If we're buying higher volume, you're getting more of a discount. So if I'm getting more of a discount, I can pass some of that discounted savings that North Star is receiving on to you. That is the reason why we can pay more. Once again, we're going to cloud the title to secure your loan. Now, let's go into 3 case studies. Here's the first deal. Nice looking house here down in Sunset Terrace. This one was a foreclosure. It was a first lien. Had 2 years of arrearage, so it was owed 155 grand. It was purchased for 55,000. That included all the costs with it. The current value at purchase was $100,000. It was picked up. It's clean 2-2. It's condo from a hedge fund. It took 18 months to foreclose in Florida. There were several delays by the borrower's attorney. It was sold 90. We were able to finally foreclose on it. They can stall all they want, but eventually they're going to lose. Look, let's be real here. People borrowed money and they didn't pay it back. That's what it really gets down to. And the property secures the asset. So we netted 40 grand. We split that with our joint venture partner. After you figure out the 18 months that it took, it was a 24% annualized return. It did take a little bit longer, but you know what? That's why I say it can take between 12 and 24 months to do these deals. Case study number 2. Nice looking house. Little house. This lady had lived in this property, I believe, for 18 years. Is up in Beloit, Illinois. She wanted to do a loan modification, so she owed 53.5 plus 4 years of arrearages. Arrearages. I spelled that wrong. My apologies. We purchased it for 11,500. It was worth 35, so about a third is what we purchased it for. She modified it. She put $5,000 to reinstate, and the borrower lived in this house. I'm sorry. We purchased the note, and we immediately made contact with the borrower. We send stuff out in the mail. The borrower lived in the house for 18 years and kept paying the taxes. She wanted to keep living there. So she didn't know who to send the payments to because it had been sold so many times. It happens. So the borrower bought 5 grand to the table. We reinstated the loan for 523.44. First year return on investment 74% ROI. And could have been done in 60 days, but our servicer drug it out a little bit to 6 months. It's fine. So this deal would qualify for a 1023 FHA refinance loan. So, and they would pay us 97.5% of the $35,000 fair market value. Not too shabby, huh? Case study 3. A nice looking house, also down in Florida. It's over in Cape Coral. They did a deed in lieu and resold. So they owed $143,750 plus some arrearage. We purchased it for 55 grand. It was worth 110. Got a deed in lieu and resold it within 60 days. Purchased note from a hedge fund, and it had been listed for a short sale many times before, so we knew what the value of the property was. Once we got it, we got a deed in lieu from them, went over, listed it with a local realtor because it was vacant. They didn't want it. They gave us a deed in lieu. Okay, sold it for 110 grand right away. Ended up netting 99 grand. It was a $44,000 profit. And we paid back our investment partner. So 40% return on investment in 60 days. In 60 days. So, again, the loan rates that we'll pay are right here. Or we'll joint venture with you. So if you have any questions, comments, or concerns, please contact me. You can call me at you can call me at 754-223-9970, or you can give me an email, scott@northstarinvestmentgroup.com. I look forward to working with you. Make it a great day.